Hello, everybody. Welcome to this webinar from Insurance Nexus and Reuters Events called the Flexibility, Empathy, and Personalization Meet the Demands of Today's Customers. As we move through 2020, wild year, customer expectations are evolving with rapid speed, with an influx of technologies and strategies that promise increased engagement and profits. The problem lies in knowing what truly works and how we move past this. The solution lies in having the right strategy, and that's what we're going to talk about today. We're going to hear from people in 3 of the leading life insurance companies in the country, and as well as Microsoft, about ideas and strategies and philosophies, really, that will help guide us through in meeting this rapidly changing and changed customer expectation environment. So you can ask a question at any point during the event. I want to point out the Q&A button at the bottom of your screen in Zoom. We'll be having a Q&A at the end, so please do ask your questions as they come to you, and we'll curate those. And also, this webinar is the first in a series tied to the Connected Insurance event that's kicking off virtually November 17th. So watch for more information on that. If this content really speaks to you and is sparking some thoughts, that's a fantastic event to get into because there's so much more that you can gain from it. So I'm going to jump right in with our first speaker so that we have all the time for Q&A that we can possibly have. So make sure you ask those questions. But we'll start off with Brooks Tingle. So Brooks joins us as the president and CEO of John Hancock Insurance, where he facilitates the John Hancock life insurance business, a leading provider of life insurance and long-term care. So with that, Brooks, I will hand the seat over to you.
Great. Thanks, Brian. And thanks for having me, and look forward to the panel today. I think, when I was looking at the title of our session today, a word that I thought was most appropriate to start with is empathy. As a life insurer, there's nothing more core to our mission and purpose than paying death claims. And it's worth noting, it's obvious to all at this point, but with almost 130,000 deaths in the US arising from the pandemic, all of us, I know, I'm sure my colleagues on the panel in our industry as life insurers are extremely focused on timely, compassionate, empathetic payment of claims to the many, many loved ones of people that have unfortunately passed away from this. I think, in our business, when you start to look at things as a claim or a policy number, you should probably leave the business, because really what we see as carriers are lots and lots of stories, personal stories. And as I have looked through so many of our COVID-related claims, you really are reminded of our sense of purpose, but you see really many touching stories, husband and wives who pass away within a couple of days of each other, both from COVID. I can tell you we've seen many, many claims that we've paid where the clients have been clients for over 80 years. And you're reminded what a wonderful industry we are in to have relationships with customers that span over 80 years. I saw a claim that we paid recently where the client had been a client for 99 years. The parents had bought the fellow a policy on his first birthday. He passed away just after his 100th birthday. So we'll talk about innovation, promise, a lot of exciting things in strategy, but it's worth noting that that is our core mission and purpose, and the backdrop against which all of this that we talk about today occurs. It's interesting because I think what's going on with COVID actually is relevant to and informs a lot of ways the priorities around innovation for our business. And for me, at John Hancock, the 2 central purposes around innovation and transformation are really pretty simple. Making life insurance a whole lot easier to buy, truly radical transformation of the buying process, and a lot more engaging, and I'll even say fun to own. Not many people think about life insurance being fun to own. Talk about that a bit. And COVID has actually presented some challenges, but also opportunities on those fronts. As it relates to the buying process, we face this paradox as an industry, really, where at the very same time, demand for our solutions has increased. And during COVID, there has been an increase in demand for life insurance. People are more thoughtful about their own mortality. What if something happened to me? But at that very same time, there's been this increase in demand due to, I would say, our archaic way of carrying out the purchase process, asking people to have a paramedical examiner visit their home or go for an insurance exam, access complicated medical records, face-to-face meetings. It's presented, again, this paradox where increase in demand, but much greater challenge trying to fulfill that demand. So certainly at Hancock, and I know many of our colleagues at other carriers, we've really started to accelerate quite significantly the digital transformation of that buying process. We have an initiative we call, it's not the most artfully branded project, but a timely, touchless underwriting initiative. Timely, it needs to be fast. Touchless meaning, like, why do we have to keep asking for fluids and things all the time? I joke that in the modern economy, I don't know if there's anything more difficult to buy today than life insurance. Buying a home is difficult, but your realtor doesn't ask you for your blood and urine, or at least I hope they don't. So, a process that lasts many weeks is so invasive, really can't lead to our success long term. So during COVID, we've been needing to rely on electronic health records, digital submission tools, things like that, and those are just going to be accelerated going forward. So one major thrust of investment around new business underwriting simplification, and again, I mean radical simplification. Over my career, I can't tell you how many times someone has excitedly come to me and said, hey, we've cut down on the length of our insurance application by 10%. Well, a 10% reduction in the traditional life insurance application means it goes from 33 pages to 30 pages. And no one would think that's simplification, but for somebody in the life insurance industry, right? Any real world consumer would say, my goodness, 30 pages. And then in terms of timeliness, the process can oftentimes take as many as several weeks. And, process improvement is not several weeks to a few weeks. It's weeks to days, indeed minutes. And that's where we're heading on the purchase part of the equation. The other part of the innovation equation for us is very much around what it means to own life insurance. For most of our history as a carrier or as an industry, we would underwrite the daylights out of folks, get to know them so very well, their medical histories and so forth, issue them a policy, and sit back and say, boy, I sure hope, Brian, you live a long, healthy life, because you living a long, healthy life works out pretty well for us as a carrier. But you know what? We didn't do one single thing to try to help achieve that outcome. Not one thing, despite our vested interest in you living a long, healthy life. So we thought that was very odd. And 5 years ago, we launched something called John Hancock Vitality. I won't get into all of it. Hopefully, most of you have heard about it. If not, you can Google it. But it's a program that provides our customers with education, incentives, and rewards for taking steps to live a longer, healthier life. And it's done a lot of wonderful things for us. We're going to talk a little bit about engagement with customers today. We've gone from interacting with our customers once or twice a year in a boring administrative way when they would pay a premium or get an annual statement, to where we're now interacting with our customers 30 to 40 times a month as they're earning points for doing healthy things. They're getting a 25% discount at the grocery store when they buy healthy foods. We have games they get to play for working out, things like that. So it's been transformational for us that way. But back to COVID and the implications for innovation. If you think about what's been happening, two sort of profound trends with consumers. One, that are relevant to us at least. One, people are more mindful of their mortality. They want protection. We see it, and applications are actually up for life insurance, not down during this. But two, we are all much more mindful of sort of our baseline health. You're thinking about this. You don't have to pay much attention at all to the news or to the scientists to know that people who are more healthy when they get the virus have a better outcome. If you're less healthy when you get the virus, you generally have a worse outcome. There are exceptions on either side. So we're finding consumers are much more thoughtful about their baseline health. So we think we're very much on the right track offering this type of life insurance that not only provides protection at death, but helps people live a longer, healthier life as they go. We came out with a variation on this last year called John Hancock Aspire, which is life insurance for people living with diabetes, the first life insurance really ever built just for people living with diabetes. And this really brings the point to life. I'm not sure who on the panel or others have studied this, but if you're a person living with diabetes and have your A1C levels, your basically your condition is under control, your A1C levels are in range, you have a 1.1% fatality rate if you get COVID-19. If your A1C levels are out of range, your diabetes is not controlled, you have an 11% fatality rate. 10x the fatality rate if your diabetes is under control or not. So at the heart of our life insurance, because again, we think your life insurer should care an awful lot about you living a long, healthy life, is a virtual diabetes care program complementing what you might do with your primary care physician to help you keep your readings in range. So again, this notion of life insurance that doesn't just pay at death, helps you live better, longer, healthier life, is really making a lot of sense to us, and is that sort of at the heart of our innovation agenda. Again, really for the basic industrial logic of shouldn't we care about you living a long, healthy life? But again, the consequences of being able to interact with our customers upwards of 40 times a month, totally different perception of life insurance. And I'll just touch on personalization before I pause, but that think about the ability we have, the data that we have from our customers now. We used to get all this data up front. We knew everything about our customers after underwriting. I had the opportunity to lead underwriting earlier in my career, and they would be many times where we would say to a client, we would see something in their underwriting file and we would say, client, you should go see your doctor. This looks unusual. We would oftentimes know more about our client's health than their own doctors would, because we'd see the full picture. But then we did nothing. Then we knew nothing about the client after that, other than whether they paid their premium or not, or maybe they changed their address or beneficiary. Nothing. Now we have this ongoing stream of data from our clients, how physically active they are, their biometrics from doctor's visits, things like that, right down to, and this will sound like a silly detail, right down to what healthy foods they're purchasing at the grocery store, because we give our clients 25% off healthy food purchases at over 17,000 stores nationwide. Well, we serve a lot of content to our customers that have vitality, and we serve them healthy food recipes. Well, Brian, if you're, why would we send you a recipe for zucchini and squash if we see that you've never once purchased zucchini and squash? This is kind of random, but you purchase lima beans and corn. I don't know, I'm making it up. But we can serve you healthy food recipes relevant to your particular taste. If we know you're living with a particular chronic disease, like with our Aspire solution for people living with diabetes, serve content relevant to the needs and opportunities for people living with diabetes. So I could go on about it, but I think the backdrop of COVID is really, I would say, just a need to accelerate this type of innovation, accelerate radical simplification of the buying process, and accelerate the relevance of life insurance for people when they're living. Help them live a better life, not just be there at death.
I think that's a great point to start and end your talk with. And Brooks, aside from me liking it because you kept mentioning me, and now I've got dinner thoughts in my head tonight, we did get some really good questions about some of the things that you posed. A couple of things I want to say: make sure people hit the Q&A. A couple of folks are already doing that, which is great. And someone did ask about accessing this webinar and the content afterward. Maybe you have to leave early or something. The link for that will be sent out to anyone registered. So not to worry if you can't stay for the whole thing and want to catch the meat of this. I also realized I was so excited by our panel, I didn't even tell you who I am. And Brooks kept using my name and I was like, wait, they don't even know me. I'm Brian Falchuk. I'm the managing partner of Insurance Evolution Partners and the author of The Future of Innovation: From Disruption to Evolution. And with that, thank you, Brooks. We'll get more from you in the Q&A because the comments are already coming in, including fantastic innovations, Brooks. I want to jump over to Mark Crow, who is the insurance industry executive from Microsoft, where he collaborates with Microsoft's insurance industry enterprise account teams in identifying key business needs and aligning relevant technology solutions. And Mark was telling me beforehand, he's an insurance guy before being a tech guy. So he's one of us, so we're safe. Mark, thank you so much.
Sure. I am a U.S. financial services insurance industry executive with Microsoft. Prior to joining Microsoft, I spent about 20 years in the insurance industry, both life and P&C. And the policyholder experience is one that's very close to my heart and one I have a lot of exposure to. And so I'm going to, let me share my screen here, get this under control. Are you able to see my screen now, Brian?
We can see your screen if you want to go into presentation mode.
Okay, great. Perfect. So today I'm going to talk about delivering a differentiated policyholder experience through digital transformation. And my presentation is pretty straightforward. I'm going to discuss some of the changing customer trends and behaviors, some of the statistics that validate those trends. And then I'll provide some discussion around what the key components are of building a differentiated policyholder experience. So first, if we look at the industry, what we see are that customers are increasingly transactional and less loyal. We see competition from non-traditional retailers, including aggregators, pure insurtechs, ecosystems, online retailers, and we see customers being more open to purchasing insurance through those channels. There's an expectation for an omni-channel experience. I'm not going to belabor what omni-channel is. I'm sure most people have had some exposure to it, but I do want to hit a few key points that are critical when adopting an omni-channel experience to integrate into your platform. First is that it's important to build an equivalent level of service regardless of channel. Next, it's critical to understand that non-personal channels might be a preferred means of engagement. It's important to know where the customer left off in a service request if they transition from one engagement channel to another. And customers expect to be known across the enterprise regardless of what business unit they might be interacting with. So whether that's claims, sales, with their agent, etc., they want you to know their household information, prior claims history, prior service requests. And customers expect to be able to connect with an agent at any point in that process, if they choose to. There's a deep need for accessibility across an enterprise, both from a customer standpoint in terms of supporting customers with disabilities, as well as from an employee standpoint. Somewhere around 1 in 7 people have some form of disability. And so it's really important to recognize that in the US alone, that translates to something like 50 or 60 million people. Good news is that customers are more open to sharing information if it means value to them, IoT, telematics, etc. And finally, there's a deep desire for self-service options, whether that's for product research, quoting, sales, service, or claims. Brian, I'm going to pause here. I think my video might have just stopped, so give me 1 second here.
Okay, we can still see your screen, so that's working.
Okay. Just need to get the there we go. Sorry for that interruption. If we look at the some of the statistics that validate these trends, the first one I want to cite is more of an industry trend than a customer trend, but it's that 20% of financial institutions consider themselves advanced in delivering a personalized experience. I think that's important for 2 reasons. One is that it shows you just how far the industry has to evolve. But number 2, for those carriers that put forth the right effort and resources towards transformation in this area, it's a significant way you can distinguish yourself amongst your competitors. Roughly 60% of US customers are open to buying insurance from new entrants, including those outside the industry. And this increases to approximately 85% for the market segment representing millennials that use digital channels. And especially if you look at Gen Z, who will start becoming home buyers in just the next few years, they've grown up with mobility first. And so insurers may want to start considering actually evolving to a mobility first design platform for their customer experience channels. Nearly 60% of insurance customers are willing to exchange greater personal information in exchange for lower pricing. 64% of auto insurance consumers are interested in insurance premiums tied to behavior such as safe driving programs. 52% of life insurance customers are interested in customized premiums tied to a healthy lifestyle. And finally, 30% of P&C customers would actually prefer self-service options for initiating first notice of loss. So let's take a look at what some of the key components of building a differentiated policyholder experience for insurers are. First, it's critical to align your IT leadership with your business leadership and vice versa. And at a strategic senior level, I think with most insurers, this is common. But when I look at the monthly business review calls, quarterly business review meetings we do with our insurance industry clientele, overwhelmingly, those are represented by IT. And there may be many solutions or strategies that might resonate deeply with the business unit if there were a business presence and be given some priority for assessing and integrating. However, when it's just IT in those meetings and calls, ultimately, they become your intermediary in delivering that messaging. Evolve to a modern data estate. Outside of the speed, scalability, data governance improvements you get, cost savings, it also allows you to far more effectively apply AI and machine learning and glean much deeper customer insights, ultimately monetize that data more effectively. Properly equipping agents and employees, critical, sometimes overlooked. They need to have the right devices, the right modern collaboration suite, modern applications. Has a big impact on employee morale and satisfaction. It also has a significant impact on how effectively they can service your customers, as well as some impact actually on recruiting. AI and RPA is an enterprise theme. What I'm referring to here is that commonly AI and RPA are evaluated and implemented somewhat sporadically throughout an enterprise, and the decisions are left up to individual business units. What we advocate in our strategic planning discussions is actually taking a step back and assessing these tools at an enterprise level, at the most senior executive level, and then managing them within that group comprehensively across the enterprise. Deploying cloud-based CRM with AI insight capabilities. Obviously, my frame of reference is Dynamics here since I'm with Microsoft. So I'm only referencing Dynamics 365 and capabilities here, but what it can allow you to do is things like propensity modeling, lapse prediction, providing insight into next best action, cross-sell, upsell, and deeper management insights. Modernizing call centers, evolving to cloud-based telephony, core systems, and CRM. Again, with my frame of reference being Dynamics call center solutions, providing insights into next best action, next best offer, as well as sentiment analysis for call center managers to more effectively evaluate calls and customer service interactions. Adopt solutions with native accessibility. We practice something called accessibility by design, which means that we implement or design our solutions from the ground up with accessibility in mind. And what that allows you to do is far more effectively accommodate your customers that might have a disability, as well as accommodating your employees and allowing them to support your customers far more effectively. Customer journey mapping. Obviously, if you're going to build a differentiated policyholder experience, it's important to understand what that experience is first in a current state, and customer journey mapping allows you to do that at a granular level. Exploring ecosystems. Ecosystems may not be for everyone, but insurers have had significant success in driving a lot of new business and deeper interaction with their customers when they engage ecosystems properly. One cautionary statement there is to make sure that your ecosystem partners, their values as a company, reputation are in alignment with yours, because ultimately their reputation and reputational risk may become yours to some degree. Optimizing engagement channels for equivalent levels of experience across your customer service platform, whether it's mobility, web, call center, et cetera. Deploying IoT and telematics strategically. I think John Hancock's Vitality program is a great example of that. Hartford Steam and Boiler and some of the work they're doing deploying sensors to their customers' commercial property sites to do things like detect water damage in real time. Intelligent chatbot deployment. One quick case study that comes to mind is the work we did with Progressive on building a flow chatbot that they deployed on Facebook Messenger and were able to drive hundreds of thousands of new quotes. And what was interesting is we were actually able to imbue that chatbot with Flow's personality and sense of humor. So customers got the added experience, or potential customers, of feeling as though they were interacting with that familiar advertising icon. Deploying self-service options so that customers can do their own product research, quoting, sales, and service. Gamification, which if done properly can improve customer experience and also drive more frequent interaction with the insurer than might otherwise exist. think a good example here is Aviva and their Drive app. Aviva is a European-based P&C insurer. And what they've done is allowed their customers deploying their safe driving app to compete with each other on Facebook and Twitter using their safe driving scores. And then finally, consider deploying personalized video statements. In this case, I'm referring actually to a specific provider called Blue Rush that comes to mind. They built a video solution designed to augment pension statements initially that will walk the customer through that printed statement, call out certain values, contributions, etc. Recently, I worked with them on modifying this solution to support in-force life insurance illustrations, which are notoriously complex documents from a customer perspective, and oftentimes they're requested in replacement scenarios where the carrier being replaced might not have any control over the narrative and how their product is being presented, how that existing policy is shown by that agent. What this video does is walks the customer through that same illustration with key call outs around things like guaranteed cash values, guaranteed death benefits, etc. And then actually at the end of the video allows that customer to click a button and schedule an appointment with an agent if they want. So it's a way of driving sales and service interaction through a medium that didn't exist previously. And I actually see applicability here to P&C. If I think of P&C deck pages, walking a customer through their homeowner's coverage, calling out things like high deductibles or lack of excess liability coverage, and then giving them the option to click on a button and schedule an appointment with an agent. Again, providing a channel of engagement and potential sales and service activity through a medium that wasn't previously an option. And with that, I will close and stop sharing my screen here.
Thank you very much for that, Mark, and some good questions coming in still. So please, please do continue to throw those in the Q&A. I will come right now to Christian Mitchell, who's the EVP and Chief Customer Officer for Northwestern Mutual. Christian.
Hey, everybody. It's great to be with you. I'm going to start with a personal anecdote. So I have 5 kids, believe it or not. Our youngest is 6. And I don't know, it's just being the youngest, he's just kind of this little devil child, like precocious, you know, learns bad things from his older siblings. So 2 years ago, this is when he was 4, right around Christmas time, my wife was at home and the UPS guy comes and he's got this giant package. And it's so heavy, my wife can't even get it in. So the UPS guy helps her get it in. Open it up, it's one of those battery powered cars, like those Power Wheels, if you remember those from way back when. And my wife was sitting there thinking like, I did not order this. Where did it come from? And she looked and our 4-year-old Hugh had his face in the corner of the room. And my wife went over and said, did you order this? And he sheepishly nodded. So apparently, you know, one of the other kids was doing homework. Hugh, little 4-year-old Hugh, jumped on the laptop. I got to Amazon, ordered the Power Wheel, went through the entire checkout process, and it showed up on our front door. So, you know, we were kind of like, what do we do with this thing now? Well, part of me was like, this is kind of cute, we'll keep it. You know, it's kind of a funny story, but I was worried that we might be incenting him to do a whole bunch more shopping on Amazon, so we did return it. The reason I share the anecdote is I think a lot about Hugh and what his financial life is going to be like, you know, being 6 years old. How is he going to buy his first house? What's life insurance going to mean to him? What is financial planning going to mean to him? He's going to be faced and is going to experience this life of experiences that's just totally different than what we've experienced. The innovation that he's going to see, the companies that are going to be vying for his attention. And so as I think about that future that Hugh is going to face, it's a future of experiences. It's not necessarily a future of transactions or accounts. And so I reflect on that as it pertains to the life insurance industry and Northwestern Mutual in particular. We face this interesting choice. Do we want to just be a product manufacturer, or do we want to embrace this idea of experience? And we've really chosen wholeheartedly to embrace this idea of experience. We want to do both. We want to manufacture as well as drive incredible experiences for our clients. So we're a 160-year-old company with a singular vision to deliver financial security so our clients can live their best life by choice. The client experience that we're building is differentiated. It's based on a risk-based approach, planning approach, the philosophy that believes you can really blend risk and investments in really innovative ways that help clients lead a more financially secure life, prepare for retirement, et cetera, and really help balance our clients' hopes and dreams, the lifestyle they'd like to live with the reality of their financial needs. And certainly technology is behind it all and heavily informed by all of the experiences that consumers face outside of financial services or outside of life insurance, whether it be Amazon, Uber, ordering coffee via Starbucks. So yeah, it puts us in a mindset where you take a step back and you start to think about the insurance industry in general and how it's developing and some of the innovations that have already been highlighted by some of my colleagues here on the call. And there's significant change going on amongst incumbents and amongst startups. And a lot of those startups are doing some really interesting things that highly successful in terms of engaging clients, really building a personalized experience for them. And many of these startups, they're client-centric from the outset. Like that's deeply embedded in their DNA, which can be very different from the history of incumbents in the industry. And as I look at some of those startups, I am struck by a thought that in many respects, we as the incumbents have been lucky. That a lot of these startups, I don't think at times have had a full respect for regulation. Some of them have had some actuarial hiccups, and in many respects, it's bought us some time as in the incumbents. But I think that time is starting to run out, and the necessity for us to innovate much more aggressively is becoming much more palpable. And I say that not to say that incumbents don't have a focus on the client. As a mutual life insurance company, we think about our policyholders all the time. It's just that implementing ideas or large changes can be challenging in an incumbent, given all the organizational structures, old ways of thinking, old ways of doing, just the practices that stretch back to time immemorial. So our conviction is that for an incumbent to have success, we really have to drive much more agile innovation, much more client-centric innovation. In many respects, it's essential that there are certain teams that are embracing the mindset of a startup by adapting and adopting these new ways of thinking. In essence, you need to have teams that are on the inside, but approaching the problems of life insurance, of financial planning, of delighting clients like an outsider. So we've been attempting to foster this outside-in mindset approach for some time. We've certainly had our ups and downs along the way. It's involved a lot of different things, bringing in new talent, new operating structures, outside experts. And one thing I would just highlight briefly is our focus on venture investing. It's been a really interesting way for us to bring in those outside insights and to see the innovation, have a front row seat to some of the innovation that's going on amongst the various startups. So we've dedicated over $200 million to venture capital investing, with the idea of driving learnings, priming a pump for potential M&A activity down the line. In 2018, we opened an innovation lab, Cream City Labs, in our downtown Milwaukee office. We regularly hold hackathons, host meetups to engage and connect with employees and entrepreneurs in the community, all around building more muscle, injecting more client centricity into the company, and use it as a platform for us to challenge long-held dogmas about what it means to be client-centric and how we serve our clients. So venture in and of itself, I think, is insufficient, but I just offer it as a proof point among many other things that we're doing to really drive the right mindsets amongst our employee base. So what's next? How do we think about the future? What I talk with my team about often is unusual pairings. So a few years back, my wife and I went on a wonderful vacation to New Mexico. We stopped at this little roadside restaurant, and their specialty was avocado key lime pie. Which on its face sounds ridiculous, like avocado and key lime pie, almost the two most disparate things, but the pie was absolutely amazing. And so I think the path forward for incumbents is really that mixture, those unusual pairings We're evolving our company-wide strategy to maintain our long-term focus on exclusive distribution through our financial advisors and our products, but couple it with the power of a distinctive client experience powered by the digital tools that our customers have demanded. And in that regard, the current pandemic has actually provided a tailwind, because we see our advisors, their rate of adoption of digital tools has increased substantially since the beginning of the pandemic, and that those benefits then are accruing to their clients. And as we think about the future, as I referenced, new ways of working, we've got to remove some of the silos internally that inhibit change, reimagine and reinvent how we connect with clients, but also stay true to who we are. Just a few weeks ago, I led a discussion with my entire function on mutuality, what it means to be a mutual insurer, the obligations that we have, how that really places the policyholder first. So we have all of these digital folks, designers, UX folks, engineers, developers, sitting through a session on what it means to be a mutual insurance company. Because again, we have to strive for that unusual pairing of the old and the new. And I would just conclude on just a brief anecdote about Northwestern Mutual. So we have very high persistency, so our clients stick with us for a long time. And on the 40th policy anniversary, we send a letter to our clients. The CEO signs it and just thanks them for their long-term commitment to Northwestern Mutual. And interestingly, more often than not, folks actually write us letters back and talk about the experience that they've had with Northwestern Mutual and how they bought their first policy when they were young, and how it has stuck with them through thick and thin, or maybe their parents bought that policy and what an important part of their financial life, their relationship was with Northwestern Mutual. So as I think about what we are doing and the digital transformation that we embark on, I think about those letters that we will send 40 years from now and the responses that we will get back. And my conviction is, in order for us to receive similar responses then as we do now, we have to stay true to aspects that have always been part of our company: financial strength, risk management, sound investment management, sound management of mortality. But we have to bring in personalization, flexibility, empathy, so that we can drive the relevance of the company forward and continue to provide the amazing outcomes for clients over the next 40 years as we have over the past.
Great, Christian. Thank you. Finally, hitting cleanup, right? As we talked about beforehand, Mary Bahna-Nolan joins us as SVP and Head of Product Innovation and Strategy at Pacific Life, where she oversees product design and strategy, underwriting innovation, and data analytics. Mary, thank you for joining us.
Thanks, Brian, and thanks, everyone. The power of being last is that you get to hear what everyone else said. Also, the difficulty in being last is sometimes there'll be some overlap, but I think that's a really good thing. So the title of our seminar includes words such as flexibility, empathy, and personalization for the customer. And when I think about our strategy and direction at Pacific Life, it really touches on all three of those words. The one word, however, that I see missing is needs. And we've certainly observed in the market today and in the discussions that we've had this morning or afternoon, depending on where you're listening from, significant discussion around digitizing the experience and that transformation. But often there's a focus on pieces of the digital experience or e-capabilities, which can sometimes be fragmented, leaving both the consumers and the financial professionals with a differentiated experience, but probably not in the way that we want the differentiated experience to be. So as mentioned earlier, I come from the life insurance side of the house, where for the past 5 or 6 years, there's been tremendous focus on how to improve, accelerate, and automate the underwriting process. And while companies continue to evolve in this space, many have forgotten about the front end or the application process and still have timely handoffs between a model, underwriter, or data inputs into the model and policy issue and delivery. And I can say for Pacific Life, we have certainly started in that place, but are quickly evolving. In addition, if companies have already modernized the front end or the acquisition process, once the policy's on the books, The processes on the back end, such as billing, claims, policy changes, in-force management, is often not digitized, again, leaving a very disconnected experience for the customer. And I equate this to a puzzle, which needs all the pieces to fit together in order to make a beautiful picture. If you change the size, shape, and feel of just one piece of the puzzle no longer fits together. Rather, you have frustration for gaps or holes, or lacks the smoothness to the picture created. And that's why at Pacific Life, we're evolving, changing, and innovating through reimagining the entire customer journey or experience. Both the end consumer as well as the financial professional are considered in that journey. And it's important that I say we are still on this journey. So a lot of the things that I discuss are things that we are working on. We certainly have not perfected the journey. And I actually don't believe we'll ever truly be done, as we will continue to learn, evolve, and grow with our customers. So to do this, we start with the needs of the end consumer and understanding who that end consumer is. Certainly more than just a high-level label, such as high net worth or middle market. Our consumers are complex, and so are their attitudes towards financial well-being in terms of where they are in their life, their upbringing, and kind of how that influenced their decisioning, where and what they place value on, and their mindfulness. This creates different perceived needs, attitudes, and preferences by what I will refer to as microsegments. So let's start with the decision to understand the need for insurance and deciding to purchase an insurance policy. As life insurance is not compulsory, we have two customers to convince on both the need and the appropriate product. In the US, there are many choices, both with respect to which company, and then within a company, which product, and then within a product, which features, bells, whistles are appropriate for the particular customer. Some products are more simple and straightforward, such as term insurance, where there aren't a lot of different choices to be made. However, many others are quite complex with significant options and flexibility. So focusing on the true underlying need of an individual, such as wanting to leave a legacy or wanting to protect against premature death, while at the same time helping to supplement retirement income, leads to very different packaging of features, marketing, or solicitation materials, and how to connect both with the emotive and financial needs, and how to engage with that customer once that policy is in force. So we really are starting with a simplicity first approach to our products, with targeted complexity only when needed, with an alignment in the product design towards meeting the actual true underlying needs, making it easier for both the customer to understand the policy that they purchased, why they purchased it, how it meets and fulfills the needs that they have, and making it easier for the financial professional to really understand and decide which product and which features are most important. Once a decision to purchase the policy is made, the journey on acquiring the policy begins. And again, for many companies, this can be arduous and uncertain in terms of just the timeliness, as well as the uncertainty of the end outcome. And the process can be long, with long applications. I think Brooks alluded to that, with 33 going to 31-page applications, medical exams, collection of fluids, and uncertainty just with respect to the overall outcome. And sometimes this can take 30 days or more to find out. So reimagining the entire experience for both the financial professional and consumer, we are evolving with starting with the application and process for improving the certainty and timing and outcome. So things like electronic or e-applications, which are really device indifferent. So if folks want to do this on a tablet, on a smartphone, on their laptop, or face-to-face, that we can accommodate those choices and create a very personalized experience, which includes an online health history, which utilizes behavioral economics and fraud detection to help from a protection standpoint for us, and to create a real interactive experience with real-time, instantly available data and application responses and reflexive questioning with respect to only the questions that actually need to be asked, being asked. And having that interaction with models and algorithms to only obtain additional information, or what I'll call slower data, when we really need it, when the likelihood that that additional information will really change the underwriting outcome sufficiently to change sort of a rating or policy. And layering that in with real-time statusing for our producers, so that they understand, both the customer and the producer understand the statusing and the process and noticing in order to best manage expectations. And then also having bailout and re-enter options for help when needed, such as chatbots and live in person, and being able to disconnect and reconnect as desired. And then following that up with electronic delivery of the policy. I think this is probably an area where many companies have evolved, but there's more that we can do. And then utilizing that experience and the information gathered, we now have a great understanding of our customer in terms of their needs, and now along with their needs, their well-being, their health, et cetera, along the lines that Brooks was talking about, we can use this for our ongoing engagement. There are a couple of things with the engagement. There's certainly the engagement with respect to health and wellness, and this the mutual interest in helping our customers live a longer, healthier, happier life. But there's also the understanding, again, going back to the needs and knowing how the policy was sold, removing the need for the customer or the agent to always remember to take a loan or withdraw or increase a face amount or decrease a face amount or make a change in their policy that was really needed to meet the underlying need. What if we reimagine that experience so that we understand what that was and connect with both the producer and the customer when it's time, taking away the disappointment when a product or policy doesn't perform the way it was initially expected, because there was a lack of understanding that there was an action that needed to be taken in order to make that happen. How do we better engage through wellness programs and pushing informative materials to the policyholder, things that have already been discussed today? Utilizing a mobile app to enable statusing, bill paying, other things. Most PNC operations have apps that you can file claims, you can take a picture, things are done. And we may not want to take a picture of a dead body to pay a claim for a death claim. But there are a lot of things that we should be able to do as life insurers with the mobile app, while at the same time connecting and gathering information to then better help our customers. And then on the service side, really utilizing voice technology for our customer service representatives when we do have someone calling into the office with a question, to understand their state of mind, their level of frustration, and to best direct a call and handle appropriately and with the appropriate empathy that is needed, especially if it's at a time of claim. So as I noted earlier, Pacific Life, we're not complete in our journey. These are all things that we are striving for. We are doing so in partnership with our customers, both the financial professionals as well as our end consumers, and with the support of our vendor partners. I think Mark mentioned the ecosystem, and really understanding that ecosystem and leveraging where we may not have the capabilities, but others do, making sure we understand that and building on that and building those strong partnerships. We understand there's no one-size-fits-all approach or product. But providing the look and feel of personalization while being efficient and mindful of the timeliness and transparency and outcome is critical to our success, it's as critical to our success as is utilizing the digital tools and data to inform and drive better decisioning. Creating an effective and powerful acquisition and engagement model with a very personalized feel, we feel is going to create a sustainable long-term customer value and win-win. So with that, I will turn that back to you, Brian.
Thank you very much, Mary. We have a flood of questions, very little time, and so I'm going to try to steer just a couple of answers on a few of these questions, because there's some great ones in here. So thank you for submitting them. We'll try to get to at least a couple of meaty ones. The first one, I'm going to start with Christian, and Mark, as a heads up, I'm going to ask for your thought on this too. if I can find, there it is. What, Christian, you mentioned this specifically, and Mark, I would imagine with your perspective, you get to see across a lot of things to get some insight on this, but what are just a couple of examples of innovative things that you see startup companies doing right now?
There's so much we could cover. We see innovative companies, it's very, very specific to our industry, rethinking the concept of death benefit. How they structure that, how it gets paid out, how they convey that to the client in a way that feels much more relevant to their personal situation rather than just, again, kind of like the transactional end of life insurance policy. So that's something very proximate to our industry. We are spending a lot of time in the innovation portfolio looking at various health tech players that are collecting, systematizing, and analyzing health data in very large industrial ways, and the applications there are huge, not only in terms of underwriting, accelerated underwriting, but continuous underwriting similar to Vitality, other ways of engaging customers in a lifelong way rather than front-ending all of that underwriting. So I'd note those two as notable, one more proximate, one slightly further out on the horizon, but there's so much going on. I'm sure Mark has also a very interesting perspective to observe all of that.
Yeah, thank you, Christian. Yeah, Mark.
Brian, and you cut out at my end for like half that question. Could you repeat it for me?
Yeah, just if there are any innovative things going on in the startup world that specifically, that speak to moving that customer engagement.
Oof. I'll think of from a provider standpoint as opposed to like a startup carrier standpoint.
Yeah.
But we see a lot of work going on with providing deeper insights into like call center representatives, providing broader intelligence around next best action, next best offer. From an underwriting standpoint, we see a lot of work being done with AI and taking true, which is, I think, true of how AI is applied across the board, but particularly relevant to medical underwriting. I'll use Spark Beyond as an example. I wouldn't call them a startup, but fairly new. They've done some work in taking traditional medical data, aggregating it with non-traditional data, and actually allowing insurers to increase in multiples the number of life insurance applications that can be approved without a medical exam. Just transformational impact on the customer experience, transformational impact on the cost to the customer as well. And much bigger discussion around how AI is being applied, but certainly in alignment with that question.
Yeah, I mean, this innovative ideas question, and we could extend it to startup carriers too that are doing things that might be an inspiration to the rest of the market, so that this alone is not a minute and a half question, but we must press on. So look, lots of mention of COVID-19. There's another major theme in our country, especially right now, and it's a global one as well. And I think this is it's a question that needs some addressing as well. So Brooks and Mary, I'm going to ask you about this, and Brooks, we'll start off with you with your perspective in the CEO seat. What, if anything, are you doing to focus on invest in underserved groups, such as investing in women-led or African-American startups, and finding new ways to serve groups that traditional insurance didn't focus on?
It's a great question. It's something I've been thinking a lot about lately. And I guess I'll tell you why. When COVID deaths first started arising, we're analytics-driven business, and you would see the number of deaths. We know our market share, and you would say, oh, we should be seeing this many claims coming in. Well, after a while now, we've realized that we've seen way fewer claims coming in than you would think just based on the number of deaths. Well, what that leads you to, and as you learn other things about who has been impacted by COVID, is that our industry has really underserved some important segments of our society and our economy. And people being impacted by COVID, I think disproportionately don't have life insurance. And it's really troubling to me on a lot of levels as somebody who believes in the solutions that we offer. So we have some things underway. We're going to be doing more. A solution like John Hancock Aspire I mentioned earlier, for people living with diabetes, there are certain communities that are more affected by diabetes. We're in the early to middle stages of forming some partnerships to try to access those communities, access those segments of the population. We're doing some things not yet ready to sort of fully announce, but on the advisor side, how can we partner with our distributors to be recruiting more diverse folks into the advisor landscape? So more to come on that, but a wonderful question and an important thing for our industry to face and fix, frankly, going forward.
Yeah, thank you. Mary, what about your perspective from Pacific Life?
Yeah, similar to Brooks. I mean, at Pacific Life, we certainly are working to try to focus on how do we better get to the underserved market. Some of the things I talked about making things simple and really understanding needs and understanding really that micro segment of the customer and what drives them is a great starting point. It certainly isn't the ending point. We are thinking about, haven't executed yet, but trying to think about how do we partner with some of our distribution partners that have some relationships. We have one large one that has relationships with a diverse group of the underserved market. And so how do we better partner with them and find the right way to bring kind of that right product to them that is affordable, but also meets their underlying need. It is a challenge, right? And I think some of it is we need to change the look and face of how we package our materials. We have to change kind of the pond, I'll call it the pond we're fishing from, right? So if we're always, I see the fish on the back of Brooks' wall there. So if we're always fishing from a pond, and I'm in the Midwest, so that stocks, walleye and lake perch, but we really want sea bass, we can't keep going to the pond that has and with the same equipment that we use to catch the walleye that maybe we would want for the sea bass. So we need to rethink and do that. And so we're having those discussions now.
Okay. We are very short on time, so I might point this one to Christian, and then I think that's maybe all the time that we have. This comes up in whether it's the life segment, the health segment, P&C, where there's some form of intermediation. So there's someone between you and the customer for a large proportion of carriers. Not everyone has a direct solution, nor will they ever. The question then becomes, if we're talking about customer expectations and how we meet them, and there's all this talk about move to more digital methodologies because of COVID or otherwise because of customer expectations, how do you do that? How do you affect that when there is someone who owns that direct customer relationship in the middle, whether they're an employee of your company, captive, solely distributing your products, or someone who's distributing multiple carriers' products? There's someone in between you and that end relationship. What are some of the ways that you bridge through that to affect change in the experience?
Yeah, it's a great question. It's one of the things we wrestle with all the time. We do have some structural advantages that help us there. The majority of our advisors start with us right out of school, and so there is a lifelong affiliation with Northwestern Mutual. So in general, there's more of a sense of partnership between our advisors and the home office than may exist elsewhere in the industry. So we have some levers that we can pull to influence them and to get on the same page in terms of really providing that client experience that has been helpful. As we move forward, in order to really drive that, because these, at the end of the day, they are captive, but they're still kind of, they're doing their own thing, is we've really taken a generational approach. So particularly with our younger advisors who are coming at this career from a much more digitally native, digitally savvy perspective, is partnering with them very, very early on, driving our digital adoption campaigns, our interaction, our training with them, such that they are building their careers, they're building their client base, their future, with this idea of cooperation, that this is an ecosystem, that we all have a stake in driving that client experience. Because from there, we can really drive the future of the company. With some of our more tenured advisors, where that tension may be more felt, that's a variety of, we employ a variety of approaches. certainly leverage personal relationships, some of the study groups and networks. And then again, the environment that we are in right now, I think even for some of our more, like I would say, old school advisors, they see the value of an immersive digital experience. And so it has provided us a unique window to start a conversation with a lot of those advisors that maybe a year ago, 18 months ago would have been much more difficult.
That's a great point. That window may be open regardless of your distribution structure because everyone has to solve for these things right now. That's great. Look, 12 more questions that we didn't even begin to touch. Vitality came up a ton. So I think a lot of the things we got into, the things we're talking about, it's on people's minds. So really valuable panel. There's a really nice way to close this up. And Mary, you laid the groundwork for this with your puzzle analogy, which is brilliant. And Brooks, it goes back to your first point. We can't just make a great purchase experience. There's everything that happens afterward. That's just making one piece of that puzzle bigger, and then the whole thing doesn't fit. So, really thinking about each of those connective pieces and what can we do to make the hold between them stronger, throughout the life cycle, moving from 2 to 3 sort of administrative, non-enjoyable, big check writing type experiences to actually being a part of the life that you're insuring. And Brooks, to that initial framing that you gave to this whole industry is spot on. We're not here to be administrators or just profit machines. There's a reason why this business exists in the first place. And I think fantastic focus today to bring us back to that important mission. So thank you to Brooks, Christian, Mary, Mark as well. And thank you to everyone who stuck through. I appreciate you joining us today, and make sure to stay tuned for Connected Insurance in November, starting on the 17th, the virtual event. Lots more in the life space, P&C, health, and it's an important time because we're all being refocused on that customer experience. And Christian's right, the door is open right now to move that needle. So thank you everyone for joining.
Bye everyone. Thanks.
Thanks.